everybody. I'm Rafe Lawson, Executive Director of the Profitability Analytics Center of Excellence, PACE for short. And thank you for joining us today for our webinar. This latest episode in our series of webinars, we have a wide range of topics that we're exploring this month, and I think you'll find them all of interest. It's my pleasure to introduce Joe Rogot, who's Principal of Strategic Growth Advisory. When I first talked with Joe a couple months ago, I was very impressed with how his approach to helping organizations enhance their profitability was very much aligned with our PACE profitability analytics framework. So while Joe will say his approach is based on experience and not theory, it seems to be very much grounded in the theory that we at PACE have. So I think they're very complementary. So with that in mind, I think it's going to be a very interesting webinar. I do want to remind everyone that this webinar is being recorded. And I would like to ask you to make sure you keep your video and audio turned off for the duration of the webinar. We will be taking questions and Joe will be answering them at the end of this session. So if you have any questions, please feel free to put them in the chat feature as they come to you during the webinar, and I will be asking Joe them at the end. So without further ado, Joe, take it away.
Okay. Well, thank you all very much for making the time to join us today. And I'm grateful to Rafe and Toby for the opportunity to speak at a PACE webinar. And I wanted to sort of reach out. This is a passion of mine, and I figured I would call this webinar. Are we going to make any money at this? I do want to say I was kind of impressed that looking at the attendees that we're covered in just about every continent in the world. I think we're missing Antarctica. I understand that this topic and the sensitivities around it and the opportunities that we have are very broad. Again, I'm here for a number of reasons. Look, I want to be able to make it interactive, share the best practices that I've learned over 34 years doing this, and understand and to increase visibility, credibility, and in this discipline and for all of us. So let me I'll bring up the presentation now. So a little bit about me. I'm the Principal of Strategic Growth Advisory, provide hands-on financial transformation advice in the asset management, hedge fund, and private equity spaces. Had a long career, beginning at Morgan Stanley, JP Morgan, Apollo, where I ran cost evaluation teams, or revenue sales evaluation teams there. Most recently, I was at a fund administrator where I reported the CEO and was responsible for managing two discrete sub-management teams and to drive incremental profitability for the organization. I got my undergraduate from Knox College in Illinois. You folks may or may not know that school. MA in Asian Studies from Cornell, and my MBA from Columbia Business School. When I look at an organization, what I see are two sort of disparate bodies, and one is going to be external, and one is going to be internal, and they both have their different clientele and different means that they're looking to different focus in their day-to-day job. So let's talk about the CEO and the C-suite. So the C-suite's external, right? And they're going to be focused on clients, they're going to be focused on the board, they're going to be focused on investors, they're going to be focused on revenue. And that's important because obviously they're representing the firm. On the other hand, let's look at kind of the role that we play. And I'll say we within finance, within accounting, within management accounting, et cetera. And I know there's some folks that are not in that role, but I want to sort of separate these two factions of an organization. Now, I think it's really important to understand that when I had finance roles, it's an internal role. So I'm looking at the numbers right. I'm making sure that we close the books at the end of the month. And largely, it's very internal, so I'm not necessarily focusing on what the firm looks like outside. What we want to be able to do is kind of understand these are separate priorities, but if we can merge them together into one strategic direction, then we have the opportunity to really have some great growth. I'll tell you a couple other items I'll mention on this slide. And this is only in my own practical working with management teams. As I said before, revenue focus. I think there is sometimes a distrust in the numbers. Something that's out there, I think is something we need to address. And to the extent we can be better able to solve that problem, we should be. And internal, again, because we're internal, we're working with numbers every day, cost centers, whatever it might be. That can be very, very complex, and it's going to take up most of your time. And so just getting the numbers right at the end of the month may not be what you really need, what we really need to be successful in the organization and in the eyes of management. And I'd love to know, you can put in the chat any particular difference or similarity that you had between the two groups. I can stop the show for a second here. Just see what the chat says. Thank you, Katie. Katie's saying 100% of what we do. You're going to hear a couple of thoughts from me throughout this, and one of them is going to be that it's not necessarily about the tools. It's not necessarily about getting things right, but about the communication. So with that, I'm going to turn to the topic of the day, which is, are we going to make any money at this? And I want, for those of you who've not been in a senior CEO role, just want to role play a little bit. So let's say you're a CEO, you have your weekly sales meeting, you have a big deal, it's ready to sign, and everybody is really excited. It's going to be a lot of revenue. It's going to change the organization. And so, everybody says, yes, let's go ahead and do this deal. But then you're asking yourself the question, I don't really know what the impact of this is going to be. And so you bring in your CFO and you say, hey, I'm just wondering, are we going to make any money at this? And again, maybe you guys have been in the situation, maybe you haven't. And the chances are going to be that on that particular opportunity or whatever it might be, the CFO may not have a great answer. Well, if that rings true, you can get a thumbs up, thumbs down. Anybody been in this situation before?
Absolutely. I in the comments, right, I see this, but I can't tell you how many times I have lamented over excitement for new deals when the deal was giving away unprofitable capacity, which then, required special development for a new bit of revenue, took away from our existing clients, took away from, our focus on other strategic plans just to meet the sales target, not considering the broader impact on the business.
Yeah. And thanks, Michael. I appreciate that. I'll give you a real life scenario. So it goes back a few years because this is when you were still allowed to smoke in the office. So for those of you who are old enough to remember this,
going back a ways.
Yeah, so you're going back a long time ago. So I was in sitting in an operations area of a big bank. We were about to sign a really big deal. It was going to change the division. It was probably going to change the bank. And everybody said yes. And so I was the analyst, and I worked directly for the CFO at the time, and the CFO had to take care of, finding a good solution to, what was supposed to be a good problem. And the CFO, he was sitting in his office, and he beckons to me, and he's got the cigarette in his hand. So he's like, come talk to me. And I don't know if you folks have ever been in a situation like that when the CFO is like quietly waving to you to come in the office. And I go to the office, and he's like, shut the door. And I'm like, oh, great. This is not going to go well. And he says to me, I'm the young guy on this. Like everybody else has got 20, 30 years experience, and they know the business, et cetera. And I'm the young guy. And he's like, we going to make any money at this, Joe? Now, I did have part of the answer at the time, but I used that to sort of craft a team and a process and a way of being able to support the strategic direction of the organization, because he needed to know that. He was a smart guy, and he knew the numbers and he knew the operation well. But when it came time for this, he needed an answer, and he didn't have it. The story ends up going pretty well, but I wanted to bring that kind of story to you all because that's what I have been doing for most of my career. I've been in situations where there's a sales or opportunity or a strategic opportunity that comes down from the top that you really need to execute on, and then you have a body of really hard won financial expertise, financial management product, reports, whatever it might be, that needs to sort of come together in a way that supports a direction. So this is not an easy question, and so let's talk about why this is not an easy question, and we're going to go through how we can take it apart. So in organizations, and we know that typically revenue is always considered better, right? And the focus is generally always on top line revenue. I'm not sure why that's always been the case, but it is. And so as long as we realize that that's what's happening, then we can understand how to manage it better. Expense is considered an allocation game. Boy, let's, we can talk a little bit about that, because I think we have the tools and we have the knowledge to more effectively communicate that it's not an allocation game, that an organization that really understands and uses their understanding of expense. It's hard to predict client behavior. Yes, it is hard to predict client behavior, but we can use our best judgment on things we've already done in the past. This is a big one, general ledger. So, folks, I've spent a lot of time with the general ledger and trying to convert that into meaningful management accounting. And I think there are definitely ways to do it. It's not necessarily easy, but I do feel like when you realize that what is being recorded in the general ledger will not, by definition, necessarily help you in understanding that next piece of business, understanding your strategic direction, then at least you have the understanding to go forward. And sometimes these will get in your way. Sometimes you're going to be working with CFOs or COOs who simply do not understand it. If you're a big organization, sometimes the management teams simply do not understand what is happening in their organizations. I worked at three different major banks, and in each one of those, typically the management of that organization had only a most rudimentary understanding of what was really driving the expense of the business. And finally, let's just be honest, there is no central person for understanding profitability. Any thoughts here? I'd love to hear any again, rings true with you folks?
Rings very.
Okay. I mean, I'm glad that we're sort of all in this situation. So now what we need to do is we need to find some ideas about how we can, if we identify this is what the system, this is what the world looks like. Then let's look for, hey, what are the steps? They could be small, they could be simple, in order to start to unpack that and get us to a place where we're moving forward in terms of being able to drive a correct, better, I want to say correct, better strategy and profitability. So here's what I'm going to ask folks. There was the community, so we'll put these pieces together. First is really about communication. And I'd ask, hey, is there communication between you and finance? If you're in finance, your operations, technology, sales, really in both ways. So they understand how you need to get your financial reports out. And on the other side, what do these product managers need in order to appropriately run their business? So I'll just take a step back. When maybe it's because I started in an operations area as an MBA, but I quickly realized that if I wanted to understand how that, I wasn't going to be at the sort of managerial level or the external level. I needed to talk to the guys and men and women that ran the engine room and really understood what their problems are on a day-to-day basis, what made sense and what didn't. And when I was able to get that information and sort of gain their trust, I had such a better view of what the organization could and could not do, a practical view of what they could and couldn't do, what things are really going to hurt the organization and what activities are really going to benefit it, that it gave me a leg up in terms of strategy. And I say that again. And that was because I simply went over to somebody's desk, in the day when you were actually in it. I think it's really important to get to know those people. And typically it's going to be, and somebody who's older in the back room, an AVP, done the same job every day for 20 years. But when you understand what they're doing, then that really allows you to move ahead. I'll just ask a question. Do you have a cost allocation tool? And if you do you trust it? I mean, this can be sort of a yes, no, yes, yeah, yes and yes, or yes and no. And of course, it is a little bit of a loaded question. Let's see what folks say. And okay, thank you, Sean. No, it's manual. Okay.
Yeah.
So
typically manual.
Typically manual. Right. Okay. So there are benefits and there are drawbacks. The benefit is that if it's manual, you're the single person responsible for being the chief profitability officer of the entire organization. And that puts you in a really important role. The difficult part is you can have wonderful systems. Here's another, I'll give you another story. So at JP Morgan, we built a great system. It took a while. We had a team, we had a process, we had a system. It ran well. We were able to evaluate stuff regularly. Over the course of 10 years, we probably evaluated 2,000 pieces of business. And we understood that all of the drivers of revenue and we understood the drivers of expense. We could mirror the two of them together. So, but we never really got the exposure that we had hoped to get. So, things change. A new CFO came in. She realized in 10 seconds that this was actually valuable and that most other areas weren't even getting close to this. And she took the presentation, she put it in front of the vice chairman. In the first week, she was actually in the office. So is it important? It absolutely is. And I think the more we focus on that, focus on creating that, great. Now, there's one problem with being the only person is that there's key man risk. So, which keeps you in that role. Like you're super valuable. But if you want to move ahead, what you need to do is create that team and create that process and document what you're doing. And then I think it gives you an opportunity to move ahead as it was for me. Okay. A couple of sort of roadmap and sort of rules of the road that I have when I'm moving ahead here. One of them is, if it's possible, talk to the management team and understand what it is that they're getting and what are they not getting that they really need, and have that as a basis. This this is your user requirements, as it were, right? Some folks don't do that. It's like if you come out with some great BI tool that has a lot of a lot of graphs and charts, that may be okay, but it may not answer the question that their question. And that's why I called this webinar, Are we going to make any money at this? Because it's one thing to have books, clean books that you close at the end of the month, and any other of the many advantages of having a really crackerjack finance team. But there's going to become a time when somebody at the top of the house is going to ask, are we going to make any money at this? And all of us, we need to be in a position to have the knowledge and the tools to answer that question. Okay, so here's a few things that I do. And first, as I said, make sure you know where you're going before you start. Second would be, as I've always said, and we can talk a little bit more about this, that I feel that marginal cost of production, whatever that is important. You'll need to collect revenue and expense journals, understand what you have that will allow you to do what you're doing and what isn't, and how are you going to bridge those gaps. And those gaps can be bridged, but you need to have a process that's really replicable and can be supported by the people that you're working with. You do your bottoms-up approach, understand your technology requirements, and maybe you're going to put in some software processes. Now, this slide is a little busy. We won't spend too much time, and this is me. I'll make sure that everybody has the presentation after, and please feel free to ask me, get back to me, ask me whatever questions. I'm happy to take you through this. This is kind of how I've done things in the past. And I want just folks to understand that I go across the top. So it's not just about finding these in sort of sequence, doing these activities in sequence, but in each sequence, there's an interaction. There's a communication with somebody that's not in finance, basically. Okay. I can't stress that enough. It's like the more people you involve in the finance product that are not in finance, the more likelihood that people are going to really respect what you are doing, and you will have, you'll have the recognition and the respect. But more importantly, you're going to be getting a better answer than you would just looking at numbers. So as I said, I would not spend much time. Basically, I source inputs. I do want you to question. Here's a question the data. Let me give you a question the data. I'll go back to questioning the data. This one, at one of my roles, we were looking at allocations of people to various clients. And it was always assumed that what was coming out of the FP&A team was, of course, accurate because they had done it for so long. But here's the problem. The problem was that the people putting their time allocations into the system really could have cared less. And so when we really dug down, the FP&A team had never bothered to question whether what they were getting was actually valid data. And in fact, it was not. And so when we changed that, and we sort of superseded these, and we really dug down, we found that we had a much different answer. So that's a small vignette. Here's my suggested requirements. Again, I've said this before, I'll say it again, in sort of full support of the CEO. I think that's really important. Define a written and defined marginal cost of production. And I'll stop for a second here because there's a couple of things on here that I want to see whether ask you folks on the chat. So marginal cost of production. Let me ask everybody a question. Do you, assuming everyone's in an organization and maybe you're producing financials, if you are, do you know what that marginal cost of production is? Do you feel like you have the capability to readily report that? And I'd like just a yes or no question.
No.
Thanks, Michael. So I'll tell you another story. Okay, when I sat in business school, and in business school there was one of the professors was the renowned economist, and he was a chalkboard and chalk kind of guy, and he would come in to the and he was like the professor of the school, and he pounded the pavement. He would laugh. He would say, I was just paid a phenomenal amount of money to go and talk to this company about how they were going to manage their profitability. And I was like, at the end of the day, it's like, what's your marginal cost? Like, why are you trying to get a fee that's going to cover your fixed costs? They're fixed, right? Understand what changes with the next activity. And if you can price for it 1 penny over that, you're doing okay. And that and those lessons, which are sort of simple, don't ring true. I had a very difficult time at an assignment where the president of one of the business entities and the CEO simply did not agree, and the president wanted a fully allocated model for every piece of business that he did. Like, I want to pay for the fixed costs every time. Whereas the CEO was like, no, just tell me how many people I need to run this client, and then I've got the idea. So contrasting points of view. I'm not saying necessarily is wrong, but in a deal game, when you are trying to get ahead, it's really important to understand what your marginal cost is if you're going to pay. So I would ask the question. So along that lines, I'll ask the question to the group. Really, what do you have a tool to evaluate a new piece of business? And business could be a new client, a new product, a new division, whatever it might be. Do you have the means to that? It could be a team, it could be Excel, it could be some kind of software, but do you have something that you can use right now? And I'd love to know what the response is.
Almost everywhere I've ever worked, it's been Excel, and the most effective way to get it to work is doing exactly what you said. You find the knowledgeable people in implementation, in operations, in the various contributors to managing the client. Could be client management, etc. And you develop heuristics depending on the mix of business, what the client's got in their portfolio. As an example, if you're servicing investment managers, the mix of assets largely will determine, some of those, which heuristics you should use to look at the marginal profitability and the profitability and the marginal cost.
Okay, right. So I think that's really important. I didn't really want to spend too much time on the presentation per se. But I'll give you one other short story, which was kind of a precursor to me getting into Wall Street. And to be frank, I did not necessarily intend to becoming a profitability, have the focus of my career to be profitability. A few of you know me fairly well. Most of you don't. But those of you who know me well, you probably don't know that in a prior life, I started a silver jewelry business with two friends as a senior in college. Now, I had not so much to do with this until we all graduated and left, and I ended up with a whole bunch of silver jewelry inventory. My partners went home, and one day I had this box of jewelry, and I'm like, you know what? We got to get rid of this somehow, because we bought this from the investor. We got to make some money to pay it back. I'll go out and sell this. So I get my box, go out, and sure enough, I'm Ann Arbor, Michigan. So there's a whole bunch of these like cheap places, and I go in there, and sure enough, I sell some of this jewelry. I'm like, this is great. I got like $200. And I go back to the apartment I'm sharing with my then girlfriend, now wife. And I'm really happy with this. I said, I just made $200 on this. And she says to me, she looks at me, she said, oh, yeah, really? How much did it cost you? And I was like, I don't know. And she gave me this look like you can't possibly have been that stupid. Now, I'm just telling you that. I'm telling you that. So as it turns out, I probably made a little bit of money on this, whatever it was. At least I moved the inventory. But it never occurred to me that I should think about what the expense is before I sell something. Now, you've heard from Michael and probably some others. And okay, so that was me. That was 1988 in Ann Arbor, Michigan, with a box of silver jewelry. So I want to fast forward to like last week, and my then girlfriend, now wife, is listening to the latest person on latest talking head on YouTube talking about how great, I think it was NVIDIA, one of the fancy tech firms, and he's saying to himself, this is so great. They're going into this one vertical, and they're going to have a ton of revenue because it's a personalized service, and he's talking about like revenue. And I just thought to myself, again, it's a new world. It's billions of dollars, but that gentleman doesn't understand. He doesn't know what the profitability of that vertical is. He doesn't know how much it costs to produce that client service for that particular company. And so, yeah, you could grow it, but again, understanding the expenses behind it, that's still something that's still to be determined. And I just leave that with you folks, which is that's kind of what we're in. And I think we have a wonderful opportunity if we have some tools, we have some enthusiasm and the ability to communicate, we can really move ahead. So listen, we're at 11:40. I've spoken a lot. I'd love to have it open to questions.
Well, thank you, Joe. And just reinforce that comment. Please feel free to ask questions in the chat feature. But I have a couple already here that I'd like to ask you. And the first is, have you noticed any difference in conducting finance transformation projects between small and larger companies? Especially with regard to the opportunities and challenges?
So I will tell you, in my career, I started at Morgan Stanley, and then my division got sold to Chase Manhattan Bank, which that division was 10 times larger than the one that I came out of. And I thought I was going to be just a cog on the wheel. But people who have the knowledge, if you are willing to be creative and you have that knowledge, there's an opportunity in the big firms to do that. Now, you're going to have to work with a whole host of different products and different product managers and a whole hierarchy. But if you're willing to go through that, the opportunity is still there. In a smaller organization, it's kind of easier. There's one person, there's one database, and you can generally get things done faster. But any thoughts from the group here?
Yeah, I would agree that the smaller the number of stakeholders that you need to get aligned on something, the easier it generally is.
Okay. Great. Any?
Okay. Well, see no other comments there. I'll move on to another question.
Okay.
And someone said, I'm thinking of buying cost allocation software to better manage my processes. Are there any drawbacks or benefits in that regard?
So I guess there are benefits and drawbacks. I've dealt with several. Here's what I would say. A cost allocation software won't necessarily replace your understanding of the business. It may make taking the information and analyzing it and reporting upon it and having an audit trail, and it may make that significantly easier. But it's not necessarily going to exclude from sort of understanding the rate and the volume of every activity that you do in the organization. I would also I'll give you another vignette. I've worked with two different organizations, very large organizations, that use QuickBooks until they absolutely positively needed to get off of QuickBooks. And then there was sort of like, well, okay, QuickBooks must be old and antiquated and it doesn't do this. And so we're going to go to this new system in particular. And so I helped with a transition to one of these systems. And it did sort of what it was intended to do, right? It gave a global multi-currency general ledger for 17 different offices simultaneously. That's okay, it's great. But when it came time to understanding the reporting requirements of the organization, and each organization is going to be a little different, it required, the new software required an entire team to perform all of the reporting that we wanted to get out of the software, to actually create the software, create the reporting, and maintain the reporting, and maintain the data integrity going into that system and the reporting coming out. So in a way, it's kind of nice that you have a one standard books and records that you can rely upon, but I only say think carefully about how the data is going to go in, how that software is going to work, and then how it will roll out after.
Well, thanks for that answer, Joe. Wondering if there's any other questions from the audience. But while we wait for those, I just listening to your presentation again, as I indicated at the beginning of this session, how much your approach aligns with our profitability analytics framework, and the need to build causal models based on operations. And it's great to really learn of your experiences, and which really are just so much aligned with that, working cross-functionally. And it's something that we at PACE espouse constantly, the need to work cross-functionally, to be a strategic business partner. It's really, I think, essential and critical to the future of the finance function that we take this approach that you've done, especially in this day of automation and AI and all these other new technologies that are automating a lot of what we do in finance or have done in finance in the past. And we need to get out of our cubicles, get out of our silo, and see what that guy's been in operations for 30 years. Just pick his brain and really work to create value for our organization. And those opportunities are there. I mean,
the opportunities are there. I mean, you can have a lot of conversations with folks, sort of the senior manager of X, but if you really talk to the people who've done the work, and they're delighted to give you that little bit of detail that gives you that bit of knowledge that's really going to drive a better product, whatever product that might be. There's your causal model, your ability to evaluate direction for the organization, and to protect the organization too, and provide really insightful reporting. But you sort of have to get down. Don't listen to this person's boss. Go to the people that are directly there, and that practical wisdom is I found to be invaluable.
Yeah, you hear how a lot of FP&A models are just based on financial information, yields such don't yield accurate results. And why? Because they don't have this understanding of operations.
You have to look. We want to be in a position, and where when folks ask, "Are we going to make any money at this?" we can say, yes or no, and here's why, and be relatively comfortable and relatively confident that we're representing what will likely happen. And listen, for me, it's been it's been a fun ride. I've had a lot of very interesting and diverse experiences, some more diverse than others, I guess. But I'm privileged to have had that. And listen, thank you. I guess if there's no more questions, thank you
Well,
all.
there's actually there is, but there's also a comment.
Okay.
Without digging into how finance and operations work together, profitability can remain elusive. So I think that's really very much aligned with what we've just been talking about. So thank you, Katie, for that
Thanks,
comment.
Katie.
And there is a question. Do you find the challenge keeping accountants from being the value add we'd like to aspire to is primarily technical, hard skill, soft skill, time, or something else?
Well, it's definitely not hard skills. Let's assume you got the hard skills. It's a soft skill. It's a you're in an area that doesn't necessarily talk to other areas, but you can learn for other areas. You can encourage that interaction, and you can simply ask. When I went into Chase, I was an associate. I go into Chase. The division's got 5,000 people, and I said, "Do you evaluate new business?" "Oh yeah, we've got this model." And then so I get the model, and the model is beyond terrible. So I asked my boss, "Hey, do you mind if I built a new one?" And he's like, in your own time, go whatever, do whatever you want. I mean, you got a day job. I don't care about a new model. Just do the day job. I'm like, I'm going to build this because, I like to do these things and I like to understand what's going on in the organization. And I'm pretty sure that this is going to be valuable. And so I stepped down and I talked to people in accounting, and I talked to people in operations, and I talked to people in securities lending, wherever it might be. And I thought about like what everybody needs, and I put it together. And inside 6 months, we had this, and it wasn't because the boss asked me to do it. It's because I did it myself, and I reached out to these people, and and I tried to, obviously you have to make the time to do it, but you say, look, I'm working on something. I need to have this piece of information. They should be relatively able to do it. If you can communicate that you're enthusiastic and that you want to help them be better at, help them to be more credible and more visible and maybe even make more money at their jobs, then they'll talk to you about all the stuff that they need, all the stuff that works, all the stuff that doesn't. And that's, if you can create that level of communication, then you're going to be the golden source of opportunity, really.
Absolutely. Before I ask the next or mention the next comment, I would like to suggest that if for all those on the call today, on the webinar today, if you find this to be an interesting topic, this is very much aligned with what PACE is all about. And I encourage you, if you haven't already, to go to the PACE website, which is profitability-analytics.org, and join as a member. Membership is free, and you'll have access to an incredible amount of resources on customer profitability, revenue management, and a whole host of related topics and resources. So again, that's profitability-analytics.org. And again, I encourage everybody to check that out. So there's one comment is that her take is that they need to embrace the practice of management accounting as a very integral discipline for profitability.
Right. So let me just, I think we know that. I'm sorry, is that a question?
I think it's it's an observation that you can speak to.
Right. Okay. Yep. It was and they may not embrace it because because what we do is consider sort of accounting, and what is accounting? It's simply closing the books, making sure people got paid. Right. Maybe it's responding to an audit. Those are all things which are important to do. It's not what I do. Those are things that are important to do. But in order to be part of sort of a something else, call it being able to grow the organization, be able to manage the organization and drive it in a particular way, it requires us to communicate out. Oh, hey, by the way, I would notice, to take those the financial information that you have and create something with it that people need to see, and that might be creating a unit cost. It could be something very, very simple. Hey, by the way, if I took your volume and your cost of all your people each month, I've noticed X. Now, maybe they've got that KPI and maybe they don't. And even something simple, cost per account, could be super valuable as that person needs to defend their own turf. And if you have that and can help them with that, that creates a relationship, and that relationship gives you the tools that you need.
Yeah, absolutely. And on our PACE website, we have a variety of ebooks. I think 3 on customer profitability, and it's scary how few companies do measure customer profitability well and manage it well.
Right.
And if finance and sales, marketing, operations don't work together, organizations aren't going to know which customers are profitable, how to grow their profitable customers, how to get rid of the other ones that aren't. And as the comment said, profitability can remain elusive. And this is this is the challenge for finance and the opportunity. It's an exciting opportunity where, again, as I mentioned before, with evolving technology, we have more time being freed up to pursue creating value in our organizations.
Yes.
Yeah. Okay.
Yep.
Any other comments? Because we're running close to the
Yeah.
final ending time here. Okay. Well, I see someone's looking forward to becoming a member of PACE. Thank you very much. Again, it's profitably-analytics.org. It's free, and we have an incredible amount of resources on this and related topics. So,
hey, Rafe, it's Gary. Yeah. Can I ask a question?
Sure, go for it.
Okay. Joe, this is a question I ask almost everybody. What has been one major lesson that you have learned implementing the methods that you help organizations with? What's one major lesson learned?
A broad one, or something that was like, I got you one?
Well, I'll tell you what mine is: how much we underestimate change management and resistance to change. That's my lesson.
Right. So change is hard. And so you have to assume that when you enter an organization, there's something going on. There are people who've done their job for years or decades in a particular way, and you're going to suggest something and you don't know how they do their job. You're not an expert. I believe the best course in terms of management, accounting, and profitability and driving forward is to understand what your marginal cost of production is, really. And if you don't do that, and understand and price your business over your marginal cost, forget about your fixed costs, forget about depreciation, and et cetera. Many of these other, you're going to have a lot of things. It's like, how much what do I need to do in order to get this product or this service out the door? How many hours, how much paint on the car door, whatever it might be. The problem that I see, and the problem that I see is this, idea of having to cover every cost and not being able to understand the difference between sort of your fixed cost and your variable cost, and being able to price that is a constant it's sort of a constant philosophical debate. And it really, if you want to move ahead, you really shouldn't have the debate, right? At the end of the year, you'll figure out what your fixed costs are, et cetera. But if you're going to look at incrementally moving your organization, you have to do that. And if you don't, typically bad things happen. And I've said no to many deals because they didn't cover their fixed cost. And I think that was a mistake. And Katie, thank you for your, I see Katie's leaving, but Katie, hope to see you on these calls again, and thank you for your input.
Great. And you know, again, this is so much aligned with what we do at PACE. What we would, from a theoretical point of view, would say we need to look at those resources and activities with a strong causal relationship. We're basically looking at your marginal costs. And you know, there's a weak causal relationship. Those costs are allocated. You know, it's good to know, but not on a short-term basis. You know, and so again, this is so much aligned with our framework, and I would encourage everyone who remained on the call to check that out. So thank you, Joe. This has been a great webinar, very interesting. Got a lot of great comments, and thank you everyone else for joining us today. And look forward to seeing you on future webinars.